Now, let's talk about the banks and how the banks won't pass on the freaking interest rate cut. Caroline Marcus has the detail of how much of that 0.25% is actually going to end up as something that you will see when it comes to paying off your home, or less for money that's sitting there because you're retired.
If cutting mortgage rates is a PR exercise, the big four banks have utterly failed. On Wednesday afternoon, ANZ and Westpac decided to give owner-occupiers and investors paying principal a reduction in their home loan interest rates of only 0.14% and 0.15% respectively. It follows yesterday's move by the Commonwealth Bank and National Australia Bank to pass on reductions of 0.13% and 0.15% respectively. The RBA cut the cash rate to a record low of 0.75% following its monthly board meeting on Tuesday, the first time Australia has seen rates fall below 1%. It was the third rate cut in 4 months, and the chance of another has already been priced in by markets. The Treasurer had urged all banks to pass on the entire cut to their customers.
Well, this is very disappointing by the banks, and they have some explaining to do to their customers, and their customers should vote with their feet.
They never learn. They honestly never learn, and it's disappointing.
Caroline Marcus, Sky News.
All right, Sam, it feels like we've had this conversation as if there was no political campaign, no election, all the rest. We've been here many times before. Geez, when there was the threat of a Royal Commission or a Royal Commission was happening, if there's a cut, there it is in full.
Everyone gets it.
Here we are way after all of that, and oh, well, no, still the cost of money, blah, 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 blah. That said, it does seem to be this moment where I'm reading an awful lot of stuff that says, look, make the most of the low, refinance if you can, and
sure,
lie back and think of England otherwise.
Look, the person I feel sorriest for out of this whole palaver is Philip Lowe, the governor. You know, he's doing everything he can. He makes very public pronouncements that the government needs to stimulate the economy and, you know, employees need to do something with wages bill. He's got one lever that he can really throw, and he's thrown it pretty much to the full extent of interest rates. It's down about as far as it can go. He's talking about quantitative easing, this idea where we just pump more money into the economy and sort of print it out of nowhere, right? These are you know, frankly, unheard of things in the Australian context. And on top of all that, so he cuts it down to 0.75, and the big banks are actually, we're only going to pass on a small
only
of
a little
that.
bit.
You know, so the whole point of these historic lows, it's not going anywhere.
Yeah.
I mean,
well, and also,
what's a bank going to do?
Yeah, but also the other thing too, Chris, is that I mean, the truth about banks, of course, is that the actual rate that they offer us, the customer, is always a couple of points above where the official rate is. So they've already got a bit of cushion in that system.
Yeah, it's bizarre, isn't it? It doesn't seem like that long ago that a 0.25% interest rate cut would lead to a 0.25% cut in what you're actually paying. They're certainly quick to ratchet it up when rates will eventually turn and go back up. They pass on the full extent of that. I think what struck me today, though, was Anthony Albanese putting it back on the government and somehow suggesting that it's up to the government to do something about this. Well, I don't know. I think that, you know, it's actually up to the punters, that if you're getting ripped off, it's up to you to do something about it. Just make a phone call, ask your bank for a better deal, and play a bit of hardball, and that's the thing that's going to make them change. This is not up to the government to somehow intervene in the way that banks do business, other than, as Josh Frydenberg is rightly pointing out today, that the banks have a responsibility here and they should live up to it for sure.
Yeah, what do you think, Fiona?
Oh, I think they're ridiculous. I mean, this is why we probably need opening of competition of a range of other banks that come in and really give these guys a run for their money. It's why, for instance, you know, you look at some of your smaller banks and your credit unions and things like that. You go places where you're going to get the actual best deal, whereas the banking model as it stands seems to only make money when other people are not. Or, you know, your credit cards, for instance, you're only going to make money. The bank will only make money off a credit card when you start defaulting on it. And this is the issue with our banking system. It's all set up for people to fail. And here you've got it again with them not flowing those cuts through. And what more can you do? And I completely agree with you, Sam. I mean, what more does Philip Lowe have to say? He has been throwing, yes, he's only technically got this one lever, But economy and running the economy is about taming wild horses. And you don't want to spook the wild horses. Well, this guy has been as loud as he can, shouting in ways which have been somewhat unprecedented for about the last 6 months about his concerns downwind of the economy. And you know what? Nobody's listened. And the fact that these banks have done that, I think, is disgraceful.
Well, I agree. But also, this is part of the problem, I think, with too much Philip Lowe. Too many stuff. I mean, literally, you have a look at sort of the Channel 9 papers, almost every second day, there'll be some quote from him from something somewhere talking about, yes, sending a message. Now, I get it, he's got to spend, but sometimes sort of the scarcity of that particular job speaking is what helps deliver the quake with it. If you're delivering sort of something a few times a week.
Yeah, look, it's not an unfair point. I agree, it's not an unfair point, but I think he's getting worried. And I think his worry is that he sees that the government is happy for us to sort of glide along on a 0.1% growth rate. So it's not technically in recession, but for all intents and purposes is in recession. He sees that situation, and I think that scares him, and he wants to get animated about that.